Hey, look, we're live. Welcome to another Thursday.
Yeah.
By the way, we get ready for this and we all sit here and smile
And wait.
and wait.
And we
I-
seem up close and personal today.
Yeah, I think
That's
we have
good.
a little bit more
FaceTime. That's good.
focus.
Yeah.
Focus.
I love how short our teasers are.
Yeah.
So this is the teaser portion of the show where we tease you into staying longer.
Yeah.
Is it working? We have a great topic today. We're talking about affordable housing and management companies. We are in an inflationary environment, and what do we need to do? We need to have assets that have passive income.
That's right.
Right after this. Wow.
I feel like we're a talk show now.
Did you see that mouthful of teeth I had?
Are they stuck?
Shut up. Gotta get my denture grip out. So, thank you, folks, for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders for investors in the Southeast. If you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, we have three rules:
Yes.
safety, reasonable return, and simplicity. So if you're interested in those things, click on the investor tab, and it would be the accredited investor tab. Don't forget to like, share, subscribe, hit the bell, and sign up with Wednesdays with Wendy. Wendy devotes 30 minutes per person on Wednesdays to talk about anything real estate related. And by the way, the link to her calendar is right over there to the right-hand side or underneath your screen, depending on the platform that you're viewing us from. She's usually booked up a couple of months in advance, so get in line while you can. Also, the comment section is for comments. So if you have any,
That's
join
right.
in.
That's exactly
or questions. Without further ado,
I do.
let's bring on Glenn Stromberg of Stromberg Investments, our good friend from Texas. How are you?
Doing, Glenn?
I'm doing great, and great to be with you guys again. You guys have gone big time since the last time I was on the show. Your promo stuff is awesome. I mean,
Yeah, we got rid of the can and the string, and now
I'm impressed. I just want you to know. So, yeah,
Well, thank you.
It's all because of our great team, which is led by Scott Patton. So we're thrilled.
Scott's the
Absolutely.
man.
Then
That's
we
awesome.
got fancy with all the different camera angles.
We're uptown now.
We're making people seasick.
Man,
I know one thing. I'm impressed. So, but
Well, as long as you're impressed, our job is done.
That's right. As long as you're not depressed.
It was well worth it. So, Glenn, I know you've been on the show before. I know there's people that are familiar with what you do, but give us that 30,000 foot, where you got started and where you are now.
it's funny. I mean, I started many years ago by answering an ad out of the paper to sell mobile homes. That's where it started, right? So it was a God thing, I think, and so I've had at one time I had up to 13 mobile home dealerships, which is just like a car dealership. I've had a mobile home park in the past. I've done a mobile home subdivision, and then I had a Clayton Homes franchise for 15 years. That was the company Warren Buffett bought. And then since 2006, I have my current model, which basically is we're buying manufactured homes on land. They're not new houses. They're already existing homes. They're normally, on average, I'm going to say 1,600, 1,700 square feet on a half an acre to an acre tract of land. So they are not mobile home parks. It's a whole different asset class, but it's very profitable. They're both very profitable. And we do it in 5 states. We do it in Texas, North Carolina, South Carolina, Georgia, and we just moved into Florida. So we're doing it in Florida too. So, and then what we do is we buy the home, we fix it up like new, We put a tenant in there. We tell our investors, you're 100% passive. You've got to wire money to the title company, look at your statement every month. We keep about 30 to 40% for ourselves. We turnkey the others to our investors. And I think we're pushing 600 under management right now. So we're pushing about 600 under management. So.
Wow.
Amazing. So you really have two arms. You're buying and rehabbing the mobile homes, and you also have a management company that manages those mobile homes, right?
And before we get into that part, and while he's shaking his head, yes, we have all that. I want to just say I have some breaking news.
Oh.
Yes. Pardon me, Glenn. So the breaking news is rates are going up.
So the breaking news was
Inflation
broken.
is high. And frankly, unless they bring interest rates up to what is our real inflation rates, it's not going to change. It's just going to continue to be that way. And that means we need affordable housing. So let's get back to Glenn.
Who's on the street with the weather.
You are in the affordable housing business, and it's very important because, rates are almost at 5% for owner-occupied properties right now. And it's very difficult for people that are at that starter home side of things to even get into the market. So where are you helping with the affordable housing side of things?
Well, obviously, yeah. And I want to say this, first of all, they will never get the interest rates where they need to go because they can't afford it in the national debt. It's impossible.
Right.
No, I agree.
That's never going to happen. But I will say this, in my almost 40 years of real estate experience now, I have never seen an affordability crisis like I have in America, like there is right now. It's for rent, for sale. It doesn't matter. It's everywhere in the country. The mastermind groups I'm in with you guys, it's incredible. So, we feel like we feel great about our space because we are the most affordable roof that you can, when I say roof, okay, there's apartment complexes and all the other stuff, right? But we can offer the square footage, we can offer the acreage, and we're normally a third to a half of the cost of a single family home. So yeah, we feel like we're in a great space. We're estimating that like when we put a house up for lease now, our demand has been 3x ever since COVID started. It's so easy to lease. Another factor too, I think that's happening is, they're saying that almost a third, since COVID happened, almost a third of the people are not going back to the office. There's almost a third, 30% are not going back to the office. So there's a lot more people that need more square footage to have an office in their house. And so, yeah, it's really been, the trends are working really, really good for us. Really, really good for us.
Mm-hmm. Well, that said, if they're not going back in the office, it's okay to live further out from your MSAs, which means that's where you're going to find most of these mobile homes on land anyway, is out away from your major metropolitan areas. So it does work.
Absolutely. And that's why, we can get the acreage. And the funny thing is too, and I'll use the Dallas-Fort Worth area as an example, right? Nobody wants their kids to be in the Dallas or Fort Worth school. I shouldn't say nobody, but most people don't. Right? Really, our stuff is in the suburbs and it's in the good school districts, right? Mm-hmm. So we have people that prefer to live out where we are, because, not just for the bigger house and the land, but for the school district too. So it works out really well for us.
What I think is interesting too is that mobile homes are more affordable when you buy them. However, the rent that you get for a mobile home is similar, if not the same, to the rent that you would get for the same square footage on a stick built.
It depends on the area. That's true in some areas. In some areas, it is going to be a little bit less, but it's proportionately, for the dollars that you invest, the rents are proportionally much, much higher, much, much higher. The returns are better and so forth. So that's why we love the space. And by the way, I went to, I saw your promo about real estate. We cut that out. Okay. We don't call it real estate no more. We call it the best kept secret in real estate investing. I really believe that. So.
And that's the truth. It really is.
All right, I'll let Teresa know.
It's,
to
it's
change
Let
those
her
flags.
know, jump to real estate. It's that's we're upscale like you guys know. So yeah.
well, the thing too is it's for owner occupied people in the mobile home market. They're having the ability to get financing a lot easier than they used to be. So that's always a plus for people that are doing that. But people that are moving into mobile homes, a lot of people would say, well, who would want to move into a mobile home when you can do a stick built? But many people that live in mobile homes, they grew up in them. They're used to them. That's what they want. They'd rather have that. Plus, that land is really important. Having the opportunity to expand and have the privacy of a lot of land around you. That makes a huge difference, doesn't it?
Without question. And you look at it, like if you've got 2-3 kids, you want to be in a 0 lot line house with no place to play, or do you want to have an acre tract of land with a fenced backyard, right? So it's kind of a no brainer in a lot of respects. And like I say, we're in better school districts too. We really are, for the most part. It's better school districts, and so yeah, there's just a lot of factors that just it makes it, and that. Like I'll say this, like I did own a mobile home park, okay, and that is a different property management. That's a whole nother. I always affectionately say you're going to deal with all God's children in a mobile home park. But we get tremendous. I mean, like we're getting a lot of 6-figure incomes. We get great credit people. They prefer ours versus the smaller square footage, the no land in the Dallas Fort. Like I'm using Dallas Fort Worth as an example because that's where I live. But we're in 5 states, but it's pretty much uniform, in all the states that we're in. So,
Yeah.
And then correct me if I'm wrong too, because I want to make sure I have my years right. But about 2010 to 2011, build on a mobile home or manufacture on a mobile home. The rooms are huge. The kitchens are huge, open floor plan. The bathrooms are really nice.
So if you like blindfold someone and took them in that and a stick built, they probably couldn't tell the difference if they never saw the outside of it.
That's exactly right.
And that brings up a point. My dad, I tell the story all the time because it was really good for me to hear. I kind of knew it, but my dad was a mason contractor and he did some building in the Chicago area, right? And he came out to Texas one time. We went around driving, looked at 15 of our properties, and he was like, "These are built better than most of the track houses in Chicago." And I was like, "Well, good to hear." But I thought, he was, and really, I think, and whenever you guys have heard me say this all the time, or when I speak, right? I show a picture of an old metal sided house, right? That it's a metal sided old 1960 or 1970 mobile home. Tires on the roof, whatever. And I go, how many people think this is what a mobile home looks like?
Yep.
80 to 90% of the hands go up. Then I'll show them our properties and what they look like. And they're like, whoa, they had no clue that, and like I say, we're buying homes that up to 2,500 square feet, right? A lot of them, they're 2,000, 2,200 square feet and half an acre tract of land. And yeah, so people just don't know. Therefore, it's the best kept secret real estate investing. That's what and what you said about the financing, Wendy, for a homeowner who's going to live in the house, they get the same FHA financing now that you do in a single family house. So yeah, right. the financing is there. It's not there for an investor. It's
right.
It's there for someone who's going to live in the house.
Yeah. And all your houses, they're all affixed to the land, everything, there's no DMV title. It is all deed of trust or mortgage,
Correct. And what the process is, when a manufactured home leaves the factory, it's got a title just like a car. Okay, that's what it is. When you put it on land, it's just a simple title company function that changes it from personal property to real property. We do that in every one. When we close on a property, we're getting a title commitment just like a single. It's the same classification as a single family house, right? So, and one other thing I'll say this too, because this is your listeners, this is good for them because people ask me this all the time. Well, don't mobile homes depreciate? Fair question, right? I go, the answer is yes and no. If it's a personal property home, absolutely they depreciate. No ifs, ands, or buts. But if it's a real property home, they appreciate like crazy. I'll give you a case in point. Properties we bought in 2012 to 2014, we've done the research on this. The typical all-in price was $60,000. That's acquisition plus rehab. Today, those same properties are selling for $1.15 a square foot, 200. We just had one that sold for 250. So
that's amazing.
It's amazing. Well, and why? Why does that happen? Because the single-family homes, and I'm using this area as an example because I know it like the back of my hand. Used to be able to buy a brick house for $150,000, right? Now that brick house is $375,000, $400,000. So it goes up and down with the market, and it's so there's tremendous appreciation in our stuff too. So
yeah, you see with the difference on the investor side of thing, if you get a home that's distressed, so for whatever reason somebody has to move out, maybe they're behind on their payments, whatever. Once it gets to be distressed, that price goes down considerably because most people don't know what to do with them.
Mm-hmm.
And that gives a great opportunity for an investor to come in and buy it at a good price and then turn around and fix it up if it needs it and then rent it back out. And that's where you get your pretty high return on your capital, right?
Correct. Yeah.
And you're not competing with all the other.
Well, absolutely. The typical, okay, so we buy a lot of foreclosures. We buy stuff on MLS. We buy all that stuff, right? But if it's a homeowner that we're buying from, we tell them straight up, if you put the money in the house, you're going to do better, right? But a lot of people don't have the $15,000, $20,000, $25,000 to put in the house, make it look like new. And so, so we come in, and we try to create a win-win for them and help us, like I tell them, we've got to make money out of it. We're not very good in business, right? So we got to make money too for our investors and everything else too. So yeah.
Mm-hmm.
Now, Glenn, I know you don't buy a lot of the new mobile homes, but can you address what may or may not be going on with the new manufactured homes and how long it's taking to get those? Is that segment feeling the same hurt that stick built is on getting supplies?
Without question. I mean, I think you guys know this, but we had bought 264 acres in the Huntsville, Alabama area. We were going to do a new house build to rent community, and we got lucky. We bought the land at a good price. We were able to sell it. But what happened was, from the time we did our due diligence period till the time we were ready to go, the backlogs went from like 6 months to over a year, right?
Wow.
So yeah, they're starting to come down a little bit, but not much, right? So it's there's like, you walk into a new manufactured home dealer, and in most cases you can't get the house for close to a year right now. So
wow,
yeah, they're feeling the pinch. And I talked to some of the plant managers, and what they said, they'd have 10 houses out ready to go, 10 nice double wides ready to ship, but they couldn't get doors or windows, had to wait on those or something, some component was missing. And so, but it's different in different parts of the country. There's, different parts of the country, I think there's different situations, but yeah, there's a supply chain issue out there. There's no doubt about it.
It's funny. I heard a story where some of the manufacturers, they're giving some of the employees credit cards to run out to Lowe's and Home Depot to buy doors to put in these things because they couldn't get them.
That's a true story. I can confirm that. Yes, that's true.
Yeah, it's something else. Now you're in 5 states, and you have a turnkey model as well. But you manage these. How's it going with the management being far flung like that? Is it?
And that's a great question. And, with technology today, it's simple, right? I mean, and I'll use back in the day, okay, when it was just me, when I used to sign a lease, I'd go meet someone at McDonald's, right? Have a cup of coffee with them, go through the lease and do everything, right? Well, now instead of meeting them at McDonald's, if they're in North Carolina, South Carolina, right? We're doing a FaceTime call, a Zoom call with them. We're going through the lease. We're docu-signing it. Same thing. We have a property management software. We don't accept checks. They have to pay through the software. So there's no issue there, and for the small percentage of people that you have to chase down for payments, of course, we have boots on the ground. We have acquisition people, service people and so forth. But, I really believe, I believe you could manage a property anywhere in the world as easy as I can here managing a property here in Dallas Fort Worth. Doesn't matter with
That's
technology.
amazing.
Yeah.
That's amazing. Now, when you're looking at mobile homes to try to figure out whether this is a deal, something that you want to do, I remember you were telling me that not all manufacturers are the same.
Correct.
There are some that just build a cheap product, and there are some that really build a nice product, and you can tell by the windows and the windowsill.
You can tell by that, and okay. I'll use this analogy too. All right, it's like cars, right? There's a low end car, there's a medium, and there's a luxury car, right? Same thing with manufactured homes. Same thing. You can get them all which way, right? Now, I will say this: from 1990 and above, the main deal they did was the biggest move they ever made was putting plywood and OSB flooring in the houses versus the old particle board, because that was the old particle board. If you spilled water on it, it would start falling. So that was the biggest move they made. But yeah, you can tell by the windows, you can tell by the crown molding, the kitchen cabinets, if it's a low end medium. So yeah, when we're buying a home, we never really buy the low end one, which there's less and less of those out there right now, by the way. Okay. It was because those didn't hold up anyway. So there's less of them, but we're buying the mid range, the high end ones that are going to hold up over time. And yes, that's part of our buy box, so to speak. Yes.
Bill and I bought a couple of mobile homes that we're actually having set right now, and there's sheetrock inside of them. They're from 2021 or 2020. Yeah, 2021. And there's sheetrock inside of them on the walls.
Oh, there's tape and texture, crown molding. There's any amenity you can think of, you can see them in manufacturing. Like I say, there. I think Jonathan, you said earlier, there's some if you walked in, if you opened up your eyes, you would never know you're in a manufactured home. You just wouldn't know. So.
Yeah, it's just that whole deal of on the investor side. I think it's more so especially on the investor financing side, changing that misconception of what we view a manufactured home as.
And so, yeah, it's you're not going to get Freddie or Fannie financing. You're not going to get that, right?
Right.
But our investors, they know, we have, that's why we use all private money. We use all private money and our returns are better than most. And yes, we have investors lined up to do business with us. So.
Can you talk a little bit about how that works?
Yeah, I mean, basically, we have two models right now that we offer investors. Okay, we have a lending model, right, where my company is gonna keep the house. We're bringing them in as a lien holder. Okay, and what we're doing is, and I'll use this is probably a normal. I'll just use these numbers for simplicity. The house is worth 100. We're probably paying 75 for that house. Okay, we're going to do a 5-year interest only, 6% interest. Okay. We're going to pay them 2 points also, but they're going to get 35% of the shared appreciation. So they've got 25,000 equity going in. And what we've learned is this, it's funny because everybody always says, well, I want 10%, right? Well, that's great, right? I mean, and I would come out much better if I just paid 10% and didn't do the rest, right? But we've had with the crazy appreciation we've seen on the lender model, we've seen 20, 25, 30. We even saw one that was 40% because it was went up that much, right? So it's and once we don't guarantee that, right? I mean, there's no guarantee on future, but I believe the real wealth is built by appreciation, right? And because that's growing tax deferred, okay? You can take it when you want it. You don't want to take it like in our lender model. In 4.5 years, we'll call the investor up, say, what do you want to do? You want to cash out? Here's where we're at. Do you want to cash out or keep going? It's probably 50-50. Half of them stay in, half of them want to cash out. So that's the lender one. And then the other one is the turnkey model, where we're buying the house, fixing it up, doing all the exact same thing. And by the way, here's what I think. I say it's our secret sauce because I don't believe everybody does this, but we fix the house up like new. That's the key, right? It's new air conditioning, new appliances if it needs a new roof, the septic, whatever it needs new carpet, new paint. It's as close to a new house as you can get. And why do we do that? Number one, if the tenant likes the area and the floor plan they're in, they're like, wow, we hear it all the time, man, you guys fix them up better than the other guys, right?
Mhm.
But just as importantly, whether we're keeping the house or we're turnkeying it to an investor, it pushes deferred maintenance way down the road, right? The air
Right.
conditioner is going to be good for 15 years. You're not going to replace that, right? We make sure the roof has a 7-year or more lifespan on it. So you're pushing deferred maintenance down the road 7 years. So that's the key to it, right? So that's the key. But we're basically selling the home to the investor, and then we do everything for them. We tell our investors, to do business with us, you got to be able to do two things. You got to be able to wire the money to the title company, and you got to be able to look at your statement every month that your check hit, and that's all that we do the rest. So if you can do that, we'll do business with you.
That's awesome.
Nice.
Now, with a mobile home, are you able to depreciate at a different rate than you would a stick built?
We don't. Okay, we don't. That's a CPA question. Some CPAs say yes, the IRS won't challenge it, but we don't do that. And I don't.
Gotcha.
I'm not a CPA, so I'm not giving that advice. We do the normal depreciation, right? We do the normal 27.5-year depreciation. That's how we do it.
That doesn't make sense to do a cost segregation on a
No.
unit that's worth, $150,000 when you start.
But our investors do.
Yeah.
Well, some of them do. That's all up to you and your CPA how you want to structure the depreciation and how you want to do that.
So we are going to be speaking at Quest IRA's Expo in September. It is from the 23rd through the 25th. You're going to be there as well. And before you get to that, I am going to make this wonderful announcement. Hey, folks, look at the screen right now because we have some great graphics that are coming up.
Today.
Okay, so we have a special promo code. If you go to the link, we have it over there in the comment section. Fairman30. I don't think you have to have caps in there, but Fairman30, you get 30% off.
Sweet 30 works too, just
Glenn,
so you know.
okay, Sweet 30 works as well. But Glenn is going to be speaking there as well, and you're going to be getting into a lot more detail about your offerings for your investors, correct?
Yes, absolutely. And you guys are big time, man. That was cool.
we had nothing to do with it. It's all Scott.
We will be there. I don't know exactly what I'm speaking or what, but I know I'm on a panel and doing some other stuff. But yeah, I'll be there, and we'll have a booth there and all that other good stuff. So.
And that Quest event is an awesome event to go to.
It really is. Matter of fact, out of all the events that I've gone to through the last 5 years or so, that's probably the biggest one out there. It probably is.
Yeah.
I know the one year they had 800 something people there. It's a big one. It's really good.
And they're thinking there'll be over 1,000 this time.
And listen, even if you don't have a self-directed IRA, you're just interested in investing in, and it's not just real estate either. It's just some a little more active than others, but it's mainly passive investing opportunities. You should go because it's going to give you insight into people that are doing this for a living that you can work right alongside of them and invest your money.
Right. And the other thing is don't get worried about the number of people there that, was 1,000 people. You'll be surprised at how easily it is to network and get into smaller groups. And it's just a great group of people.
Absolutely. And I always tell people, whether you're an active real estate investor or you're passive, the networking at those events they're priceless. I mean, they're priceless at those events. So yeah, I strongly recommend people go to that because as we know, we've heard in our mastermind groups, your network will become your net worth. And that is a very true statement. Very true statement.
Yeah.
Absolutely.
And by the way, you're going to be surrounded by like-minded people.
Yes.
And that you can only benefit from that.
Yes. Right? Yes. And then you and I too are speaking in June 22nd through the 25th at Tom Nardone's event in Florida.
And I am too. So
Yeah,
I'll be at
that's
that
what I
one
meant,
too.
you. So, and we'll get him on the show before then so we can tell people about that event as well. And that's strictly about mobile homes, right?
Yeah. Tom, him and I are kindred spirits. Yes, he gets mobile homes just like I do. So yeah.
Well, he learned it from you.
I'm not sure I could take credit.
He'll tell you that he learned it from you. That's pretty awesome.
Good to hear. I'm glad to hear that. He's a great guy.
Well, we kind of sprung that on Scott and Sharub. They had no idea that that was coming up. So next show, we'll have some graphics for that.
Yeah.
A way to link it up and get to go to that event as well.
Yeah.
Glenn, thank you so much
You're the man.
for coming on.
My pleasure. My pleasure.
We
Thank you
love
guys
you.
for having me. I always enjoy it. You guys are great friends. Love you guys, and it's always great. So.
And you know we love you too. And that and just in case you folks are wondering, we're just throwing out niceties. Glenn is truly one of our dearest friends, and a brother. So we just love him.
Folks, thank you once again for joining us on the Real Estate Investors Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you're interested in borrowing money on your investment properties, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, once again, we have 3 simple rules: safety, a reasonable rate of return, and simplicity, because I'm simple-minded. You can click on the Accredited Investor tab to find out more information on that. Don't forget to like, share, subscribe, hit the bell, and sign up with Wednesdays with Wendy. See you guys next week.
Toodles.